2 million transactions analyzed daily. Success rate 97%, legendary. Deutsche Bank invests 300 million in AI. JP Morgan expects $2 billion profit from artificial intelligence. Meanwhile, YouTube gurus tell you ChatGPT will make you millionaire by next Tuesday. Let me tell you what actually happens in those boardrooms. This is education, no financial advice. Last month, I'm sitting with an old colleague from earlier days, major bank. He shows me their new AI system. 2 million transactions analyzed daily. Success rate 97%, legendary. But for what exactly? For fraud detection. But guess what they don't use AI for? Trading decisions. I actually laughed when I told me that. Here's this bank spending hundreds of millions on AI, and the traders still making decisions the old-fashioned way, with spreadsheets and Bloomberg terminals. Banks have used algorithms since the 80s. 40 years of developments, trillions in investment. The smartest minds from MIT and Cambridge. Think about it. If AI could reliably beat markets, Goldman Sachs would already own the entire stock market. They don't. That should tell you something. But wait, the YouTube trading gurus have a secret ChatGPT prompt, right? The one banks don't want you to know about. Sure, they do, and I have a pitch to sell you. Look, I've tested every revolutionary AI trading system, spent entire weekends running backtests, got so many different AI subscriptions I cannot even count them anymore. You know what I found? Well, I'll show you the brutal reality. And hey, if you want to see how institutional investors actually structure portfolios, check out my 3-bucket system video. Real strategies, not YouTube fairy tales. Okay. ChatGPT for trading. University of Chicago tested GPT-4. 60% accuracy on earnings predictions. Humans only manage 53%. Sounds amazing, right? I thought so too. Here's what I don't tell you. In real trading, not backtesting, but live money, ChatGPT has a 50 to 20% hallucination rate. In some studies, even 40. That means every fifth analysis is completely fabricated, invented, made up, fantasy. I tested this myself last week. Simple task. Calculate the Sharpe ratio of a portfolio with 60% stock, 40% bonds. 3 attempts, 3 different numbers, all wrong. I even asked it to check its own math. It apologized and gave me a 4th wrong answer. Imagine trusting that with your actual money. It's like your drunk uncle for stock tips at a Christmas dinner. Entertaining? Sure. Profitable? Come on, you know better. Now, here's where it gets interesting. The MIT conducted this massive study, AI-powered mutual funds versus human managers. The good news? AI funds outperform human managers with similar strategies by 5.5% annually. The bad news? They still underperform the simple market index. Well, think about that. The most sophisticated AI in finance can't beat just buying everything and holding it. Renaissance Technologies medical fund? You've heard of it, right? No? It's the holy grail of AI trading. 66% annual returns over 30 years. Insane numbers. But here's what YouTube gurus won't tell you. Jim Simmons has 100 PhDs on stuff, not regular PhDs. We're talking MIT math professors, string theory physicists, code breakers from the NSA. Access to data you'll never see. Execution speeds measured in nanoseconds. Infrastructure worth hundreds of millions. Plus, and this is the real secret, they kept the fund at 10 billion. Why? Because the strategy doesn't scale. Even with all the firepower, all the genius, all the technology, it only works as a specific size. Well, try that with your 1,000 euros. Good luck. Here's another killer study from 2024. Really opened my eyes. Algorithmic traders beat humans by 20% in trading surplus. But, and that's a massive but, only under perfect conditions. Normal markets, steady volatility. During market crashes, humans lose less. We've had algorithms for 40 years, high-frequency trading, neural networks, now large language models. And yet, the best institutional investors, unlimited budgets, MIT graduates, built-in euro infrastructure, they still employ human portfolio managers. Why? Because AI is brilliant at normal markets. Humans are better in crisis. And guess when most retail traders lose their money? Exactly. So, what actually works? After all these studies and 40 years of algorithmic evolutions? 3 things. And they're wonderful, boring. First, Robo-Advisors. Betterment, Wealthfront, Scalable here in Europe, they average something around 4 to 7% annually. Not through clever trading, not through market timing, through automatic rebalancing, tax loss harvesting, and rock bottom costs. These aren't new AI breakthroughs, it's automation of strategies institutions have used since the 90s. My neighbor used one, checks it twice a year, outperforms some of my fancy analyzers. It hurts, but it's true. Second, quantitative ETFs. They use real AI, but not for predictions. They optimize for risk-adjusted returns. The MSCI World Momentum Index outperformed the standard MSCI by 2.3% over 50 years. Not magic, just systemic application of factors we've known about for decades. Momentum, value, quality, the boring stuff that actually works. And third, pattern recognition tools, not for trading, but for anomaly detection. Is this crash normal or should I panic? Is this rally sustainable or a dead cat bounce? That's where AI actually helps, keeping you from making emotional decisions. The truth nobody wants to hear, banks have been using these strategies long before ChatGPT even existed. The technology got better, faster, cheaper, but the principles exactly the same. I remember a bank announcing their first AI models a few years ago. You know what actually changed? Compliance reports went from 3 hours to 30 minutes. Credit card fraud detection improved by 12%. Document processing got 5 times faster. Trading returns? Exactly the same. So, what does this mean for you as a regular investor who doesn't have 100 PhDs in speed dial? Here's my institutional perspective after 2 decades watching this. First, forget AI trading bots. Seriously, delete them from your phones. If banks with billion-euro budgets can't beat the markets with algorithms, your ChatGPT subscription won't either. Second, use AI as an education tool, not a decision maker. Ask ChatGPT to explain you PE ratios. Ask about compound interest. Don't ask whether to buy Tesla. It's Wikipedia for finance. Great for learning concepts, terrible for trading signals. Third, if you want AI-powered investing, do it right. Robo-Advisors for your core portfolio, 60-70% of your money. Low-cost quantitative ETFs for the satellite positions. Keep total costs under 0.5% annually. And fourth, the best AI is one that protects you from yourself. Automatic saving, automatic rebalancing, automatic diversification. Boring? God yes. Profitable? Hell yes. The best AI strategy is the one that prevents humans from making emotional decisions. And you know what's beautiful? You can have that today for 20 euros a month. Not 300 million like Deutsche Bank, just 20 euros. Remember, if algorithmic trading was a money printer, every bank would use it to generate infinite returns. They are not. They're using AI to save compliance costs, to catch credit card fraud, to process your mortgage application faster. The boring stuff, the profitable stuff, that tells you everything. Look, I get it. The idea of an AI making you rich is exciting. I fell for it 2 years ago, lost some money I couldn't afford. But here's the truth. Banks use AI for boring, profitable processes. YouTubers sell you AI as a get-rich-quick scheme. Who do you think knows more about making money? The largest banks on the planet with their multi-billion-dollar AI investment, or some guy in his bedroom with a ChatGPT prompt? Please, use your common sense. Don't fall for every new hype. Next video in this series, we're diving deep into Robo-Advisors. Not the marketing fluff, but what they really do with your money. The actual math behind rebalancing, the tax optimization strategies. Who should use them, who shouldn't. Everything you need to know. I'll break it all down like I always do. Real numbers, real examples, real institutional insights. No YouTube fairy tales. Look, I genuinely appreciate you being here. Taking the time to understand this stuff properly. In a world full of get-rich-quick scheme, you're choosing education. That means everything to me. If this institutional perspective helped you see through the AI hype, please hit subscribe, hit like, share it with the one friend who's about to buy another AI trading course. It costs you nothing but helps me reach more people who need real financial education. And comment below. Have you tried AI tools for investing? What happened? Good experience, bad experience? I want to hear it all. I read every single comment. Your questions literally become my next videos. That's how we build this community together. Thanks for watching, thanks for being smart about your money, and I'll see you next week. Stay smart, stay skeptical, and remember, boring makes money.